Welcome back to the second ever installment of Clickbait and Coffee with TCI, baby. It's just a good catchphrase. Don't take it too literally. Now, here in this video, I do want to go over the dovish Fed Jerome Powell that may or may not come out. This is very important because we are seeing a bullish reaction within the small and mid cap stocks. If Jerome Powell is dovish, you are going to see a rush for the exit for the short sellers. Not all of them. We're not talking about the MOATs, but we are talking about a mega bounce, baby. That's what we're going to go over here in this video. Take a look at the option chain as well as the SEC news that did come out that has the whole community riled up for good reasons. So hit that like button for me. Consider subscribing to the channel if you guys want to stay up to date with the most impactful, knowledgeable information about AMC and the broad markets. Thank you very much for tuning in here today. So let's dive into it. AMC, like I said, up about 8.5%. We were up about 11% at one point, but this is a clean break from the bottom. And what I really want to point out is the fact that the markets have been selling off so much that a very, very hawkish Fed Jerome Powell is expected. If he's not as hawkish, that could leave a lot of room for a bounce in the broad markets, but specifically in the stocks where retail has not buying. The retail stocks are not being bought by retail investors, so that gives the hedge funds a clear path to short these stocks into the ground. AMC, GameStop, all of these stocks that are up 5 to 12% right now are the ones retail has not been buying. They've been scared. Hedge funds have been shorting. So to basically offset that risk, once Fed Jerome Powell goes dovish, the hedge funds will flood to start covering their positions. And with AMC in particular, AMC has a lot of option activity, which does set us up for this mega bounce. Now, I'm not trying to toot my own horn here, but I like to call out these mega bounce situations. And essentially what that is when you see a lot of calls that are out of the money compared to in the money, and you do see a lot of puts that are in the money when you're getting close to the end of a expiration week. Now, today is obviously Wednesday, tomorrow is Thursday. So if these calls start to run into the money and the puts run out of the money, there's only like 2 days left after today for the market makers to fully hedge out these positions. So if you see a big move, these positions pretty much have to be hedged instantaneously, and that is instant buying power that goes into the marketplace. So that is the whole concept around a mega bounce. When you add in shorts in the equation and potential FOMO buying, that's when you can really see these 20% days. And if you guys are newer to the channel, this is the first mega bounce that we hit. This was December 17th. I put my neck out on a line and it did happen to be correct. There was one other one that we did see as well with the whole GameStop NFT partnership situation, but this may or may not happen. I'm not saying it's 100% going to happen. I'm laying out how the data here does suggest we could see another big mega bounce, possibly by the end of the day today, in after hours, or tomorrow if Fed Jerome Powell is very dovish. But there's a possibility here, a very real possibility, that Fed Jerome Powell is going to be a super hawk and could crush everything that I'm saying. So keep that in mind. If he is a dove and you see that confirmation, you could see a really good trade here with options, and your shares should obviously, your portfolio should start to look a whole hell of a lot better. So please push this video out to as many people as possible. I want people to hear this thesis and to at least learn the knowledge base that goes about with these mega bounces. So let's dive into this. And like I said, guys, we're looking at about 9,200 calls that are in the money. So a small amount relative to the calls that are out of the money, sitting at 146,000. So that's potentially 14 million shares that would have to be fully hedged for if they all went into the money. Now, odds are a majority of them will not. But even if half of these went into the money, that's about 7 million shares that would have to be bought on the lit exchanges. And considering the volume that we are seeing on any given day, that's a substantial amount. But when you consider the puts that are in the money at about 50,000, let's say half of these run out of the money, that's about roughly 2.5 million shares that would have to be bought on that side. So all in all, you're looking at about 10 million shares that would reasonably have to be bought in almost an instantaneous fashion if we do start to see this mega bounce. And a mega bounce is like a 20 to 30% move. So this is not technically a mega bounce by my personal definition, but still, hey, it's an up day. We're not going to argue with that. So, but we really have to now take a look at the option chain to see how close these contracts are to going into the money, because the closer the calls are to going into the money, the more you can actually see this bounce. And voila, what do we have it here at the $18 strike? 6,300 for open interest, 10,000 at the 19, 10,600 at the 20, 5,000 at the 21, 5,000 at the 22, 8,500 at the 23, 9,500 at the 24, and about 9,000 at the $25 strike. So I do think if we do see a dovish Fed Jerome Powell, $25 by the end of this week is not off the table. Let me repeat. If we see a dovish Fed Jerome Powell, $25 is not off the table, considering what we are looking at, the low volume and the short activity that is currently here. Now, let's go ahead and take a look at the actual short interest just to give you guys a refresher, and then we'll go over this SEC situation that has a lot of people very excited for good reasons. So, for today, we're looking at 20.58% short interest of free float, 105.63 million shares that are currently sold short. Share utilization going up a little bit from the past couple of days, now at almost 74%, and days to cover at 2.61. So if shorts want to cover, it's pretty hard to get out of their short positions in a rapid fashion, especially if they do have large short positions. And we actually did just get the exchange reported short interest for the settlement date, January 14th. So on January 14th, the short interest was clocked at 18.9% and days to cover confirmed at 2.35. Baby, big round of applause for all of you guys. It is about to get insane, baby. Let's go. Let's go. Patience pays. Okay. Don't get me too crazy. We save that for the live streams later on tonight, 10 p.m. to 11 p.m. Eastern Standard Time. Make sure you guys are on there. We have a lot to go over as far as what Fed Jerome Powell is going to say. So this says U.S. SEC aims to gather more details on fund strategies, use of leverage, among other details. There was the meeting between Gary Gensler and other people that are a part of the SEC, and he was saying that there is a lot of leverage that is unaccounted for that is a bad problem. So that's why everybody is excited, is because I'll just read it. I'll just fucking read it. The U.S. Securities and Exchange Commission will propose new rules on Wednesday to boost hedge fund and private equity fund disclosures as it looks to increase oversight of the private funds industry and better monitor systemic risk. Now, think about Archegos. They were a family fund that was severely over-leveraged, but the SEC had no idea because they only have to report, once a quarter, or bi-yearly, or just once a year, depending on the firm. So it says the proposed changes to the SEC's foreign private fund PF rules would require private funds to disclose details of material events within one business day, compared with the current quarterly or annual requirement depending on the firm. The draft rule would also reduce the foreign PF reporting threshold for private equity advisors from $2 billion in assets under management to $1.5 billion in order to capture more firms. But the data would not be publicly disclosed. It would help regulators better spot signs of trouble such as big losses, significant margin and counterparty default events, material changes in prime broker relationships, and other events associated with withdrawals and redemptions, the SEC said. So this is a big deal, ladies and gentlemen. And I will actually read this too. The private funds industry drew fresh scrutiny after hedge fund deleveraging contributed towards turmoil in the U.S. Treasuries market in March 2020, and hedge funds were again at the center of last year's GameStop meme stock saga. That's a bit of a tongue twister. But basically, if you think about Archegos and these private family funds or just private equity funds that invest in the markets, they don't have to disclose what is going on. So Gary Gensler and the SEC thinks there's a lot of over-leveraged firms out there that are probably in a lot of these meme stocks taking advantage of this. So to protect investors, to protect the investing landscape, this is inevitable, and this is a very good sign, because if they are over leveraged, this could force them to cover on those short positions that they are super over leveraged on. So hopefully you guys got some value out of this video. Hopefully I didn't just mumble on too much. I am very excited about what I am seeing. So hit that like button for me, comment down below, subscribe to the channel if you guys are also excited. If you guys want access to all of my trades in real time, baby. If you want a mentor for all of your trading strategies or any thoughts that you do have at any time, 24/7, 24 hours a day, check that out. Link down below in the pin comment. Get yourself some free stock with Moomoo, Webull, and Public. They all give you some free stocks. 5 free stocks with Moomoo, 5 free stocks with Webull, and up to $1,000 in free stocks with Public. So check that out. We'll love and appreciate you guys. Thank you for watching. See you on the live stream later on tonight. You guys enjoy your day. I'll see you in the next one.